All right, so right here, let me start. I know this is actually the kindergarten of trading, the OHLC. This is actually the kindergarten of trading. I hope each and every one of you knows this, but I will still cover it up because it's part of the course. All right, so obviously the charts are made up of bullish candles and bearish candles. Yeah, they're made up of those. And this one here is, all right. So this one here is the bullish candle, and this one here is the bearish candle. All right, so the bullish candle signifies or shows like a rise in price, and the bearish candle shows a fall in price or a decrease in price, or whatever the word, to showcase some reduction of something. So right here you can see in this bullish candle, when you see a bullish candle, all right, when you see a bullish candle, you always know that the first, like this start, like this actually goes, all right. All right, so this one here is obviously the opening price. I know you all know this. So this is the opening price, and then after that, price usually goes down, uh, obviously rejecting the downward again, the downward force, or the like rejecting the prices, and then going back all the way until the highest price, and then now coming back again to the closing area. So that's how it is. So it starts here, so it opens here, that's where it opens, like it opens at that price, it goes down to print that wick, or to, yeah, to make that wick, and then going all the way until the highest price reached by that candle, and then reversing back to where it is closing. So open, then the low, then the H, then the C. Right, on the bearish candle, it showcases like a low in price. So obviously we start on the opening where it opens, then going up, then after that, now after going up, like showcase the highest price, rejecting them, and then going back all the way to the low, and then finally reversing back to where it finally closes. So that's the structure of this, and that's how like these are printed. Yeah, you can even check them while they are printing. Yeah, you'll find that the pattern of how they are forming, it's actually like this. So that's actually the simplest thing about now, but it's very important to know. Right, so right now I will just go into the candlestick based uptrend and candlestick based downtrend. All right, so this one here is the candlestick based uptrend, where price is printing consecutive bullish candles, and like I said, this is the highest point reached by that candle. All right, so this one is the highest price reached by that candle. So a candlestick bullish, like a candlestick based uptrend, it's when price breaks past the highest point of the previous bullish candle while protecting this low. So again, on the next candle that breaks past the highest point of the previous bullish candle while protecting the low, again another candle comes and breaks past the highest point while this low is still protected, and this is how like the candlestick based uptrend is actually formed. The low is protected while the highest point is, it's actually the one that is being broken. All right, and this one here, like this is the candlestick based downtrend. The lowest point is the one that like the next candlestick breaks, so the lowest point is broken, and then the highest point is protected. Again, the lowest point, the highest point protected, and this is actually the candlestick based uh, downtrend, and this one is the candlestick based uptrend. All right, so let's now dive into now the identification of pullbacks. I just wanted to showcase that because it's very important while I showcase that in here, and I have already showcased, or I have already said the importance of this part. Like, this is a very crucial part, and like this, without this you will find it hard onwards, because you will not be able to identify correctly the order flows, the order blocks, inducements, and all of that. So yeah, a very important part. All right, so in a bullish scenario, you can clearly see like this is a bullish scenario. So starting with number A, or starting with scenario A, all right, so starting with scenario A, like I said, in a bullish, like in a candlestick uptrend, candlestick based uptrend, we break the highest point while protecting the low. All right, so in a candlestick based uptrend, we break the highest point reached by that candle while protecting this low. The same on this here, I was anticipating that price should break past the highest point of this candle to, yeah, for price to actually be on that candlestick based uptrend. But now the next candle, instead of actually breaking past the highest point while protecting the low, it, you can clearly see that it broke past the lowest point achieved by that candle and then reversed. So you can clearly see here it broke past the lowest point while the high is still maintained. So it broke past the lowest point and then all the way reversing. Then now the next candle is the one that broke past the highest point of this candle. So you can clearly see here the lowest point is broken first before the highest point. So in this case, this here is now a pullback. Now this is what we call the pullback. So like this becomes easy when you actually know the candlestick based uptrend and the candlestick based downtrend, how they are formed. And I've already showcased that. When, like on an uptrend or in a bullish scenario, the highest point is the one that price breaks. But now if price decides to break the lowest point first before the highest point, then that will be a valid pullback. All right, you will get it. Let me get into this next example. Right here, you can see this is a bullish scenario. So I'm anticipating break past the highest point of that candle, of the previous candle, and the low being protected. All right, so right here we can clearly see this is the highest point of this candle, and the low right here it's protected. Then coming up to the next, this is the highest point, but you can clearly see price broke past the lowest point before breaking past the highest point. I literally showcased how this price is printed when I was showcasing like this. It was the first thing that I was showcasing, that price first in an uptrend. Right here I showcased that in an uptrend price opens, then gets down to the lowest point, and then up all the way to the highest point, and then closing right there. So this is a pattern that you need to know. Price opens, goes down to the lowest point, then all the way to the highest point, and then reversing back, closing where it actually closes. All right, so that's in an uptrend or like in a bullish candle. All right, so now let's get back here, and now here it will now become easy. So right now let me showcase this. All right, so price broke past the highest point of this candle, and right now here, so price opened here, and then after opening, obviously it goes to the lowest point, and then after the lowest point going all the way to the high, and then reversing back to the closing, which is this one here. So you can see price was like this, and then reversed, and then finally completed like that. So this one here is a pullback because the lowest point of this candle, so right here price first broke past the lowest point of this candle before breaking past the highest point. And in a candlestick based uptrend, we need breaks past the highest point without breaking the lowest point or while protecting the lowest point. But in this scenario, price broke the lowest point and then now reversed, breaking past the highest point of the previous candle. So this one here is a pullback because price started with the lowest point and then the highest point. Just like in this scenario, you can see price broke the lowest point and then now the highest point. So this is now a valid pullback. Same here, this here is a valid pullback. And now the low of this pullback is obviously this one, and also the low of this pullback is obviously this one. All right, so coming up into this next pattern, you can clearly see this is the highest point, and obviously this, you can clearly see price is rising, and we said if price is rising, this means we are in a candlestick based uptrend. All right, so right here, this is the highest point and price broke past that. So right here, I was anticipating a break past the highest point, but price, all right, this is interesting. Price didn't broke past the lowest point. You can clearly see the lowest point is protected, and right here broke past the highest point while the lowest point is protected. This means that this one here is not a valid pullback but just a single move all the way to the upside. So in this case, this is not a valid pullback. Why? Because the lowest point was protected and price broke past the highest point without breaking past the lowest point. You can clearly see this is the highest point and price broke past the highest point too while protecting this low. So literally I can just be like blind, like I can just ignore these ones. Yeah, I can just be blind and ignore all of these. So yeah, so right here this is not a valid pullback. All right, so these were bullish scenarios. So now I'll be turning into bearish scenarios. All right, so C, D. All right here. All right, so this now is interesting. You can clearly see now, all right, on a bullish scenario, I said we are breaking past the highest point while protecting the low. Right here on a low, like on the bearish scenario, we were breaking past the lowest point while protecting the high. Just like I showcased right here, we are breaking past the lowest point. Right here, price breaks past the lowest point while the high is protected. Again, breaking past the lowest point while the high is protected. Now that's a candlestick based downtrend. All right, so let me get here into scenario number D, exactly right here. All right, so this one here, now this is interesting because you can clearly see when I draw this line, this low, this low of this candle and this lowest point of this bullish candle, they are all like equal. So yeah, they are all equal. So a break past this. So you can see we said in a bearish scenario, we actually in a bearish scenario, we are breaking past the lowest point while protecting the low, while protecting the high, that is. So this one is the lowest point and price broke past that. But you can see like this candle and this candle, they have like an equal lowest point. So in this case, you will ignore this first candle and pick this second because they have the same like lowest point. And then now you will now be continuing with the same thing. If so, like here you can see price broke past the highest point, and yeah, first it broke past the highest point and then now came breaking past the lowest point. So in this case, we said once we see a break past the highest point before the break past the lowest point, this here is a down, like this is a valid pullback because we need just breaks of the lowest point while the highest point being protected. So in this case, since we said that we will now be ignoring the first candle and picking the second candle because they have the same, like they have an equal lowest point, then we will now be considering the high of this second candle, and so we need a protection of this high. But you can clearly see the next candle like broke past the highest point before breaking past the lowest point, and then after that the candlestick based downtrend continued, that is breaking past the low while the high is protected. So this means that this one here, or this scenario, is a valid pullback, with this one here being a high of that valid pullback. Alright, you have noticed that in a bullish scenario, I'm actually showcasing a low of the valid pullback, like the lowest point of that pullback, while in a bearish scenario, I'm actually showcasing the highest point of that pullback. Alright, and to scenario E, we can clearly see very clearly here, price is in a downtrend, like in a candlestick based downtrend, and this one here is the lowest point, and price broke past the lowest point, while the highest point right here is protected. Again, right here you can clearly see price broke past the lowest point, while the highest point here is protected. So this means here there is no any valid pullback. This one is an invalid pullback. Even though you see this bullish candle, we will just be ignoring it, because for us to actually consider, or for us to mark in a bearish scenario a valid pullback, we need a break past the highest point of the previous candle. But we can clearly see the highest point is maintained, while the lowest point is the one that price breaks past it. So this means this candle here is just there, but it has no any significance. And in this scenario, this here is an invalid pullback, and this candle, it is the one that we call the insider bar, and we usually ignore this candle in identification of pullbacks, in identification of order blocks, in identification of order flows. Like we usually ignore this child candle or insider bar, or whatever name I would like to call it. Alright, so onto scenario F now. The same continues. You can see price breaks past the lowest point exactly here. So exactly right there, price breaks past the lowest point. Again here, price broke past the lowest point, and then I was anticipating a break past the lowest point, but then price broke past the highest point before breaking past the lowest point. And we said if price starts with the highest point in a bearish scenario before breaking past the lowest point, that's a valid pullback. It doesn't matter how many candles price prints after that. If it's 4, 3, whatever the number it prints, it has no limit. This here is a valid pullback, and this one, no, so that is after price has broke past the highest point with whatever number of candles it would like to print, and then reverse back and close past this lowest point. Now this high of whatever candle it will have printed, like the most highest point, now that's the high of the pullback, and this one here will be a valid pullback. All right, so with these 6 scenarios, I hope like you have gotten like a deeper understanding of how to identify valid pullbacks. And right now I'll be diving into the real chart so that we can identify with you like some number of scenarios where pullbacks can occur. Alright, so starting with this chart, this is USD card. Alright, so right here you can clearly see, so is this here a valid? Right, yeah, sure. Alright, so onto our class. You can clearly see this. Let me check this scenario. Yeah, right here. So this one here is, you can clearly see we're in a downtrend. So is this a pullback? Yes, it is a pullback. You can see the highest point here, price broke exactly right here. Price broke past the highest point. All right, I think I should use this so right there, price broke past the highest point. Instead, or like price started breaking past the highest point before the lowest point. So this means like this here is a valid pullback, and this one here is the high of that pullback. All right, coming up here, you can see price has been breaking past the lowest point while protecting the low until here. price broke past the highest point exactly right there before breaking past the lowest point. So this high is a valid pullback high. Alright, price was now breaking past the lowest point until right here where price broke past I think this one here. Yeah, exactly this one. Price broke past the highest point. Alright, I think it's low because I'm recording this one. I will need to reduce the quality. Alright, so that one, and then after that you can clearly see price continued until here price broke past the highest point. So this means that this one here is the highest point of that pullback. So you can clearly see now it becomes easy. All right, here again, price after price broke past the lowest point of that previous pullback. You can clearly see that then I was expecting price to break past the lowest point while protecting the high, but first price started breaking past the highest point before breaking past the lowest point. So this means that this one here is our pullback. Hello. Alright, so this one here is the highest point of that of this pullback, and then right here I can clearly see price was just downtrending. So this means this one here was our recent pullback until price here broke past the highest point, and I said it doesn't matter how many candles price prints after that, after breaking the highest point, as long as price breaks past the highest point of the previous candle and then reverses and breaks past this now, then this one here is now a valid pullback, and this one here is the highest point of that pullback. You will come to know like when now price takes out the previous one before breaking, like all of this, you'll now understand this better on the next, on the next session, that is tomorrow, because this is where now market structure comes in. Identification of valid pullbacks until another pullback takes the high of the other and all of that. But right now I'm just showcasing how to identify valid pullbacks. So right here, is this a valid pullback? No, this is not a valid pullback, because you can see like the high this here is the lowest point and price is breaking past the lowest point, and I cannot confirm that one to be a pullback because the highest point right here is protected. So now let's say price did something like this. Let's say now this price wicked all the way until right there. So if this was the scenario, you can clearly see now I will confirm this one here to be a pullback because price has broke past the highest point of that previous candle, and we said we need that to confirm a valid pullback in a downtrend. In a candlestick based downtrend. Right, so exactly right here I can clearly see this is a valid pullback in a bullish scenario. Again, this one here. So price, you can see price has been breaking past the highest point until here, where price now broke past the lowest point with some wicks here, and then price now broke past the highest point. Again, after that, price broke past the lowest point of this candle, exactly right there, before price breaking past that. Again, same scenario, price broke past the lowest point. So all of these are pullbacks, and the lows of these pullbacks is this one. This is the first pullback. Again, another pullback. This is the low, and I said I'll be explaining this scenario tomorrow, where price takes out the low of the previous pullback. Yeah. So this means this here is a mega pullback because it took the low of the previous pullback. So in this scenario now, how you go about it. Is this now a change in market? I mean, is this now a change in market structure, or like all of that? Is this a breakout structure? Is this the inducement? You'll know like on the next session. All right, so you can clearly see it becomes easy identifying the pullbacks. I said this is a very crucial part to know, especially when identifying market structure and inducement, engineering liquidity and order blocks. Yeah, you will need to know how to identify valid pullbacks. By now, I believe each and every one of you have actually understood everything that I was showcasing. And yeah,